Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. Now, in today's podcast, I wanted to discuss a firm that's not a Big Four accounting firm, but is basically a spinoff of the Big Four accounting firms, and that's Accenture. And Accenture is basically just a large consulting firm. It's very, very similar to the Big Four accounting firms, other than it's not an audit firm, but as far as the consulting, it's very similar. And the reason I wanted to cover them is because you can look at some of these large public consulting firms, and Accenture is probably the largest one, and you can get a view of what the Big Four accounting firms' year and quarters are going to be like, even though the Big Four accounting firms don't really report on a quarterly basis other than through internal emails. And even when they report internal emails, it's usually by line of service and not necessarily the whole firm. But if you look at Accenture's earnings, just for the past year, they had earnings similar to Deloitte, where Deloitte had $50 billion in revenue and Accenture had $50 billion of revenue. But that was the past year. Accenture is already into their fiscal year 2022, similar to the Big Four accounting firms. And they had their earnings about a week ago, and they blew their earnings out of the water. Analysts were expecting about 14.22 billion for the quarter, and Accenture beat that with revenues of 14.97, and that represents a growth of almost 30% year over year. So that's pretty insane growth for Accenture, and especially in this economy where people are worried about so many things, inflation, etc. But we see larger businesses taking over the market. And even in the stock market, larger businesses are doing really well, where the smaller businesses are getting beat up. And so I think that's part of this. I think it's government spending too, but it's a little bit harder to dig into that through Accenture because they cut up their revenue into really weird categories, similar to the Big Four accounting firms, into industries, into weird name service offerings, etc. But I think this shows that it could possibly be the Big Four accounting firm's good year too, because Accenture, another thing that we learned from this is Accenture raised their full year guidance. As you know, in the Big Four accounting firms, their growth is typically around 5 to 10%. It tracks just normal GDP growth around the world, typically. But Accenture did something crazy, and they raised their guidance for 19 to 22% for fiscal year 2022. And it's in a year where a lot of people are predicting a downturn, predicting a recession, because interest rates are being raised all around the world. So if that pans out, then it should be a really good year for the Big Four accounting firms. And this is off of recent news too, not only of Accenture, but KPMG having a blowout year. So it's going to be really interesting to see if the Big Four accounting firms are also going to track similar to Accenture. I'm sure they're tracking right now. So if we keep an eye on Accenture for the year, then we can get an idea of how consulting firms are doing, and the Big Four accounting firms are doing, and we can relate that to figure out what the Big Four accounting firms are going to do, and then you can maybe use that to get a new raise, maybe use that as leverage or to predict how your firm is going to do. And another interesting thing about Accenture is they're a public company, so you can also think of the Big Four accounting firm's market cap. But you'd have to look at a price to earning ratio, and Accenture's price to earnings ratio is pretty high, but Accenture's market cap is $255 billion, which makes it one of the largest companies in the world. And you can correlate that to the Big Four accounting firms, and Deloitte would have a similar market cap, and all the other Big Four accounting firms would have a similar market cap, but obviously KPMG's would be much smaller. And you can also look at what analysts say about Accenture, and I feel like the same thing would be said about the Big Four accounting firms. And there's some bullish analysts say that Accenture will increase wallet share with its enterprise customers as a technology landscape becomes increasingly complex. Accenture will rely on more on automation to handle some of its business process outsourcing, allowing for margin expansion. And this is the exact same thing that the big four accounting firms are doing. So it's kind of funny to see them say this about Accenture. You can just replace Accenture with any big four accounting firm. And it also says Accenture's mix shift away from more commoditized offerings should boost profitability. You could say that about the big four accounting firms too. And there's some bearish analysts that say, bearish analysts would be a negative analyst. They have a negative outlook. And they said, given our belief that reputation is a key driver of Accenture's wide moat, if a large scandal were to occur, the firm's reputation could suffer. The move to off-premises workloads leads to new competition in the form of cloud service providers that could limit Accenture's growth opportunities. As Accenture navigates away from some business process outsourcing services more subject to commoditization, clients may become more familiar with other consultancies they employ as outsourcers, resulting in replacements of Accenture's consulting projects. And I would agree with that a little bit. But the thing is that I think the analyst doesn't understand necessarily the marketplace. I'm not sure Accenture has a moat. It's just a replaceable consulting firm, because the big four accounting firms, I would say, are within Accenture's moat, and they could replace Accenture at any time. All these accounting firms and all these consulting firms could replace each other. It's not a moat. It's about, having people come in, do a request for proposal, and you pick whoever, is in your network. Accenture is better at things than KPMG, PwC, Deloitte, and so they win those projects. But sometimes but if Accenture gets too good and they're kind of replaceable, then you go to another firm for pricing. So I think the analyst, I understand what they're saying, but that's not necessarily true. I think if people are used to using Accenture, they're going to use Accenture unless there's pricing difficulty. And as far as people working off premises, I don't think that's a big deal for Accenture or other accounting firms. And I don't think there's cloud service providers that can necessarily do what Accenture does. And even though people might be working off site, there's still a lot of people that are interacting in person, or every now and then they're interacting in person, or they're used to meetings. They're used to client services. Cloud service providers are not used to client service, and not used to like client meetings all the time. Don't get me wrong, there's salespeople that are, but there's not people that are used to that interaction, and the cloud service providers are not going to be up to speed on all that. So in conclusion, we've learned a lot about the potential year the big four accounting firms are going to have. And there's just a lot you can learn from looking at Accenture if you want more public information on a quarterly basis about the consulting business. But that's the podcast for today. Make sure to subscribe to this podcast to get future updates, and check out the show notes for useful links. Thanks for listening.